Now let's talk about an important issue that affects all Americans, right? Because we know that there's two guarantees in life, death and taxes. And certainly these tax returns this year is going to be a doozy. There's going to be a lot of changes. So we got to go to our expert here, Mark Stever, Tax Information Officer with Jackson Hewitt, always in the know when it comes to this stuff. I saw Mark kind of laughing there as I was introing him. How are you, Mark? Happy New Year to you.
Happy New Year. Very exciting time for all Americans. It's tax refund time.
Tax refund time. Certainly some changes this coming year for these tax returns for 2022. Tell us some of the big changes people need to watch for.
Yeah, it may seem like it was not a year big change because there was not a lot of media on tax law changes and that year-end bill fizzled, but there are a lot of tax law changes. We call it the year of the great tax reset. A lot of the benefits that were put into place for the pandemic, increased child credit, dependent care credit, earned income credit, being able to deduct charitable donations if you don't itemize, all of those expired last year at the end of 2021. So they're not in place for 2022, and that could cause lower refunds for some taxpayers and may have some tax refund shock or tax refund risk of shock if you're not careful. So it's probably a good idea to pay extra close attention to your taxes this year and get after it a little bit earlier than you might have in the past.
Okay, so let's walk through it just kind of step by step here. Let's talk about first the changes you mentioned, the child tax credit in 2022.
Well, for 2021, it was about $2,000, up to about $1,400 was refundable. Jump ahead to 2022. Or 2021, pardon me, the government changed the bill to allow $3,600 per young child and all of it refundable. Well, at the end of 2021, that expired, so it's not in place for 2022. It's back to that original amount, $2,000. And that's just one example. So if you had child tax credit last year or dependent care credits last year or earned income credit and you were single last year, you got a much bigger refund last year. Those won't be in place for this tax return, and it could result in a lower refund. Now, there's still great benefits, and they're still there. They'll just be a lot different. So I would tell your viewers this. Don't use last year's tax return as your absolute guide for what to expect this year. Life changes and pandemic changes notwithstanding, the tax changes reverted back to prior pandemic amounts.
Okay, what about the child and dependent care credit change? Tell us about that.
Similar to the earned income credit, it was double, tripled, and made fully refundable in 2021. And then that expired in 2022 and was not updated. So it's back to the pre-pandemic amount. Now, if you do have children that were in daycare so you could work or you and your spouse could work or summer camp even, you still have a nice big credit. It's just not as big as the 2021 size credit was.
Sorry about that, Mark. Those who are self-employed, what kind of changes are they looking at?
Well, there's still some great benefits if you're self-employed, full or part-time, have a side gig. The big one we've seen, and it continues to be big, the home office deduction. It's available if you're self-employed, full, or even part-time, or even if your spouse is. Not available if you're an employee. And there's a host of other deductions from travel, cell phone, computer, marketing, pocket expenses, out-of-pocket expenses, lunches, materials. All of those can go in to reduce your taxable income from your side gig and make your return on your activity a little bit better. So if you have side gig income, and a lot of people have since the pandemic, make sure either you understand what all the rules and deductions and options are or your tax pro does, and keep really good records because every deduction reduces your taxes and can increase your tax refund.
A lot of people are going to be wondering if they can still write off their charitable donations this year. What do you think?
Yeah, well, that's one of those ones that you could during 2021 at the height of the pandemic law changes. It expired in 2022. You still get a nice, healthy charitable donation for cash to your church, your mosque, or your synagogue, and even the fair market value of stuff that you donate. Unfortunately, it's only available if you itemize. In America, you need to get the standard deduction, or if larger, the itemized deductions, mortgage interest, property taxes, and charitable donation, among the many. And you have to be an itemizer to take charitable donations. people still do, but not as big as the option was in 2021 when you didn't even have to itemize to take that. But again, that one expired last year, not here this year. So when you go doing your taxes, don't look at last year's return as your roadmap for what to do. A good tax pro will know, but other people might make a mistake.
What about the earned income tax credit? Any changes in this year?
Well, it's one of the most overlooked tax credits. 1 in 5 people fail to take advantage of it. First, the good news, it's still in place. It's still a $6,000 plus maximum credit if you have 3 or more dependents. Unfortunately, for last year, like some of those other rules, if you were single, they tripled the amount of the earned income credit up to about $1,500. That, like those others, expired at the end of 2021. But it's still a nice credit. It's still a credit for moderate and middle income taxpayers that have earnings, and it's one that's often overlooked. So if you're not sure if you get the earned income credit, like a lot of the others, education credit, dependent care credit, and more, make sure you talk to a qualified, trained, and experienced tax professional to make sure you get all those credits. Because if there's one thing besides death and taxes like you open, if you leave it off your tax return, it stays off your tax return. The IRS is not in the business of making sure you get all your benefits. Only you and a tax pro, if you use one, can do that.
Okay, and finally, will there be more stimulus checks or recovery rebate credit this time?
Certainly does not seem to be in the play right now. They floated that idea last year a little bit. It never really caught traction. So I don't think you'll see one of those big stimulus payment checks like the $1,400 and the others. Now, some states are doing it, and they're creating a little bit of confusion on how you get it. Is it automatic? But in large part, there will be no stimulus on the 22 tax return. But a lot of other things still are. I go back to the credits we talked about, deductions we talked about, other benefits that if you look to your tax return, and more importantly, life changes that you had during the year, got married, got divorced, had a new dependent, taking care of a dependent parent, all of those can add to your tax return, tax refund, and they're not as big as tax law changes in the way of publicity. So if you had something big happen in your life, gone back to work full-time, self-employed, sidebar, side gig, make sure you tell your tax pro you may be sitting on some other boosters for your tax refund this year.
Mark, this has been so good. You've given us so much information out there. Where can people find that information online?
Well, any good tax company has a good website, jacksonhewitt.com. We have videos, tax tips, checklists to get started. You can put your zip code in and find an office near you. Make an appointment if you don't just want to walk in. A lot of things on our website at jacksonhewitt.com. But it's important to know next Monday is when IRS really starts processing tax refunds. So there's no reason to wait. Your documents are coming in. Get that shoebox envelope ready. File early, get your money early. You don't have to be Warren Buffett to know that makes sense. And you can start as early as today, but it'll start filing with the IRS on Monday.
And the deadline this year is April 18th, right?
That's correct. The 15th is on a weekend, and anytime it's on the weekend, it falls to the following Monday, which would ordinarily be April 17th, except that this year, that's Emancipation Day, a national holiday in Washington, D.C., so it moves to the next day. So you have a couple of extra days, April 18th, to file your taxes. But again, there is no good reason to wait. 3 out of 4 people get a refund every year. We expect that this year. File early, get your money. File early, lock up your data with the IRS in case one of those schemers has stolen your name and your social or your spouse. So file early, get your money. File early, lock up your data. And most importantly, file early in case you have new questions that come up from all the stuff we talked about. You don't want to be up against that midnight hour on the 18th looking for records for your side gig income. You want to do it early for all the right reasons, mostly because if you do money, you get the money. And even more importantly, if you owe taxes, and here's a big secret for your viewers, if you file early and you still don't have to write that check or debit card or checking account until April 18th at midnight. So filing early is separate from paying early. You can pay later.
Okay, tax information officer, the chief tax information officer for Jackson Hewitt, Mark Stieber. Mark, I always love chopping it up with you when it comes to taxes, what to watch for, what to not include or include this year. You spell it out so perfectly. We appreciate your time. Thank you.
Good luck to you all. It's the time to file.
Yes, sir. Appreciate that.